How much does this relief package move the dial? And of course, we have a lack of clarity as to another bill possibly where we could see the amount that individuals receive goes up to $2,000.
Yeah, it's certainly a relief to the markets. I think if you go back a few days ago, we were concerned that this problem would overwhelm the markets into the new year and that we'd have to wait for President-elect Biden to take office before we could see a bill. So it's signed now. We get that money onto the streets. It's going to save a lot of people kind of a miserable time at the turn of the year. But I think for the markets to get excited, they will need that $2,000 check. And that's still going to clearly take some time for Congress to get their heads around it.
Gary, but what it does do is, I mean, it does increase savings in the US probably, and that's what we witnessed with the last round of checks here as well, and some of that found its way into the equity markets and possibly responsible for the big upsurge that we've been witnessing, especially with the retail investor propelling this rally originally. Do you see this meaning that the equity rally that we've seen has more legs?
We certainly do. You're absolutely right. You know, if you look at the checks being written to the US households, it's for 85% of people. I'm not so sure that 85% of people are in distressed situations. So the savings pool will go up. A lot of that money will find itself into the equity market. Clearly, cash balances don't pay. Bonds are providing minimal yields, even in the high yield market, considering the risks. So we're expecting the retail investor to be a key supporter of US equities into next year, even if valuations are somewhat stretched. Right.
So where do you therefore look then? And where are your, when you look at CIOs, what are they looking at? And where is the investment? How does that leave the investment strategy of various people?
I think for US equities, there has been some rotation into value stocks. And, you know, I think with the vaccine now being distributed, people will perhaps be more confident about making that play. That means going into the consumer discretionary. It means going into maybe even the airline and the hospitality stocks that are clearly still getting beaten up, largely because of the problems we've still got with the COVID on the streets of the US, probably well into January. But I do think even US investors will be looking more internationally in 2021 than they maybe did in the past year.
Gary, is the vaccine front, a greater positive than the concerns of this new variant and further lockdowns?
I think so. I think the market is probably listening to the medical evidence and saying that there may be, the COVID is going around quicker, but maybe we're hopeful that the vaccine will overcome all of these even mutations of the virus in the coming months and over the next couple of years. So I don't see this thing as a bigger problem. It's just we just want to get past these months where we're still stuck with the bad news from the virus. It's still damaging global growth. We're not getting on the front foot yet in terms of upgrades to GDP numbers. Those are still coming down. But as I say, it's just a pure weighted market that keeps asset prices rising, even with this bad backdrop.
On the other front, we did get some news finally on the Brexit trade deal. We've got a chart for our terminal subscribers just showing where we've seen sterling amidst this last 4 years or so of turmoil. Where does sterling go now?
I think it certainly goes higher. I would put 140 on it, probably as a near-term target. I think we'd have to get past the kind of impact of whatever's been agreed over in Brussels in the last few sessions of the negotiations that have been going on before people feel more confident to push it higher. But sterling's not going down from here. They've got a deal. I think the market was in a mind of it's 50-50 whether this deal was ever put together. So it will come as a pleasant surprise as people return to their FX trading desks at the turn of the year here.
And is everything priced in on the equity front too? I notice you're going positive on UK equities for 2021.
Yeah, we jumped early on this one, expecting a deal, and but we're only up to what I would call a neutral position. I think there are a lot of people who don't have the exposure to the UK equity market, largely because they thought that Brexit wouldn't happen in an elegant way. We've got an elegant solution. I do think international money goes in. This is a market that's underperformed massively over the last 2 or 3 years. There could easily be 10 to 20% upside, and the currency appreciation as well.
So that's a common narrative actually emerging at the moment, Gary. But, you know, the other narrative is that people have been looking at rotations from value to growth, or shall I say growth to value. But it's not that binary, is it?
Absolutely not. You're absolutely right. There are sectors here that are still going to struggle. I mean, if you look at one of the big value sectors is the bank sector. And in Europe, they've still got their problems. They're not really being able to return to either buy back their stock or to distribute dividends. So as a value sector, you don't see a huge amount of upside in something that's still constrained by circumstances.
So talk us through some of your other calls for next year, Gary, as we look into this rotation trade. But also I note that you say the US here underperforms. It has been an incredible run for the likes of the S&P 500.
It has, and that valuation is very high relative to other parts of the world. We do like the Asian markets, not just because I'm sitting here in Singapore, but if you look at a country like China, even though we're talking about Alibaba this morning, you know, that is a country that's continues to deliver good GDP growth. And I think, you know, asset allocators today have over 60% in the US equity market in their equity allocations on average, and less than 5% in China. I think there will be a marked rotation into Asia. China will certainly benefit, but even the smaller markets of the ASEAN part of Asia, I think, can catch up after some marked underperformance over the last 18 months.
Gary, I mean, you know, if you had this panoply of things which have gone wrong this year and you end up with a huge rally, you got to ask yourself, you know, what bad news could possibly affect things in 2021? So what's the biggest risk for you?
I think the biggest risk is that markets just get overextended. I think the US is probably there already. But I do think as we get into the back end of 2021, we're going to find that we get back to the mundane, that global growth is a very modest number, and it doesn't justify some of the PE valuations that some of the stocks have got onto. But for the first half, it'll be the excitement of fiscal packages such as we're seeing from Trump, which are very supportive of global growth, and also extremely low interest rates. But by the back end, the governments will have spent the money, and central bankers will not be wanting to cut interest rates still further. So we'll lose some momentum.